Day 4 of the Iran-Israel-US war. Tehran national broadcaster bombed. US embassy in Riyadh hit by drones. Iran officially closes Strait of Hormuz, that is 20% of world oil stock. Casualties: Iran 555 plus dead, US 6 soldiers, Israel 11. Trump, most significant blows still coming. Monday's markets: Nifty and Sensex minus 1%. Defense stocks soared, airlines bled. Brent touched $78 before settling. Bankers Bootcamp here. Arming IB aspirants, IB professionals, and exam warriors with interview crushing macro calls, prop desk strategies, and deal origination edges. Now, March 4th, Wednesday, open preview with fresh war developments. This session is for the battle-tested analysis. India's oil lifeline holding, BRICS fractures, US inflation trap, trade war endgame, 5x5 sell stocks updated, FII DII flows live, plus 2 alpha edges. Your unfair advantage starts now. Monday reality check. Markets minus 1%, but Russia oil discount saved the day. India imported 1.8 million barrels per day at $62 average versus Gulf's $95 average, that is 8.2 million per hour savings. Updated war escalation impact. Hormuz closure confirmed, 21 million barrels per day, that is 20% of global supply halted. Anchor insurance plus 500%. Brent peak $78 intraday Monday, now $75.5 futures. India exposure 85.4% import dependence, that is 4.7 million barrels per day, where $10 per barrel rise equals $13.5 billion annual hit. At $110 sustained, $52 billion CAD explosion, that is 1.6% of GDP. Granular cascades, inflation channels, petrol 100 to 248 liters, Delhi pump math. Aviation fuel, Indigo costs plus 42%, that is 52% operating expenses. Yesterday, minus 8.3%. Petrochem chain, MRF tires plus 28%, Asian paints plus 35%. Input costs, margin crushed, 14% to 7.5% CAD per rupee math. Monday rupee 86.42 rupees, that is minus 1.2%. Tomorrow target 87.2 to 88. RBI sold $2.1 billion Monday defending implied from flows. Reserves dipped to $645 billion. Corporate stress tests. Refiners win, BPCL plus 4.2%, Kochi 100% capacity. Consumers lose, Maruti minus 6.1%, rural sales evaporate. IB pitch mastery, Hormuz equals structural CAD vulnerability. RBI intervention limits plus rupee carry unwind equals 200 bips OIS spike opportunity. Kid analogy, enemy blocked your candy truck, Gulf oil, but dad found secret supplier, Russia. Sweets safe today, but price still up. BRICS statement, Feb 28th, now looks hollow. War exposes fractures. China 11 million barrels per day importer. Factories idle, diesel plus 45%. Shanghai composite minus 3.8% Monday. Foxconn halts iPhone lines. Real hit $25 billion per month import bill spike. Russia opportunist. Urals crude $92 premium, that is plus $12. But NATO secondary sanctions threat if arms Iran. Rosneft shares plus 2.1%. Saudi UAE Gulf chaos. Riyadh US embassy drone strike. Aramco facilities targeted. OPEC plus fails. Output cuts irrelevant versus a war premium. D-dollar reality check. Dollar index plus 6.1%, safe haven. BRICS local currency trade stalled at 12%. Target was 30%. Stat bomb. BRICS equals 42% global oil demand. War multiplies it by $250 billion collective shock. IP Pro Edge. BRICS distressed sovereign advisory fee explode. That is, pitch alternative settlements mechanisms. Monday markets, US. S&P 500 minus 2%, VIX 27.8 multi-year high. Treasury rally, 10-year yield 3.72%, that is minus 28 bips flight to safety. Sector bloodbath. Defense, oil surge. Lockheed plus 5.1%, Exxon plus 3.4%, Chevron plus 2.9%. Airlines travel massacre. Delta minus 7.2%, United minus 6.8%, Carnival minus 8.4%. Retail pain. Walmart minus 3.1%, Target minus 4.2%, shrinkflation 2.0. Macro nightmare. Gasoline plus 32%, CPI plus 1.1%. Fed pivot. March cut odds plunged to 12% from 78%. Recession probability 68%. Trump calculus. Base approval plus 5 points, but 1.4 trillion GDP risk if 90-day war. Interview case study. War premium creates Volcker disinflation trap. Textbook IB macro case. Hormuz closed. Day 4 reality, 21 million barrels per day halted. Insurance premium 600% spike. Tanker rerouting adds to $2 million per ship dollars daily cost. Sanctions escalation, US freezes $135 billion Iranian assets. India's Russia deals targeted. That is 1.8 million barrels per day, 35% imports at $62 discount. Geopolitical flashpoints. Saudi split. Aramco hedges China sales plus 25% volume. China rare earths withholds from US defense minus 30% supply. India master play. Only major economy hedged via Russia. Historical replay. Gulf War 1991. That is, oil was plus 89%, markets minus 18%, then 32% recovery. IB gold. Weaponized choke points equals to decades structuring opportunity. That is, wool swaps, commodity hedges. Monday flows. NSE, BSE, MSCI. FII net sell 3,296 crore rupees. DII net buy 8,590 crore rupees. DIIs absorb 260% of FII selling. Market stabilizer supreme. Wednesday setup. Nifty futures minus 1.2%, that is to 24,620. Volatility persists. Rupee 86.92 rupees, that is minus 0.6%. RBI $1.8 billion intervention. Bank Nifty minus 2%. PSU crash. Institutional battle. FIIs rupees 3,296 crore Monday sell. That is 2025 year to date rupees 1.5 lakh crore record. US yields plus 30 bips, portfolio exodus. DIIs 8,590 crore rupees, powered by 28,000 crore monthly SIPs, mutual funds, now market backbone. FDIs $2.1 billion paused. Defense, energy inflows frozen. Heat map update. Defense, HAL plus 12.4%, BEL plus 9.8%, oil, ONGC plus 6.1%, BPCL plus 4.7%, airlines, Indigo minus 9.2%. HAL, target rupees 5,950, 12.4% up from Monday. Order book rupees 5.2 lakh crore to 6.8 lakh crore. Philippines jet deal accelerates. ONGC, target rupees 395, 6.1% from Monday. KG D6 RAM 15% output. Perfect hedge play. BEL, target rupees 435 plus 9.8% from Monday. Radar contracts double. Navy panic buying. BPCL, target rupees 810, that is plus 4.7% from Monday. Kochi refinery 108% utilization. Export margins rupees $18 per BBL. Nippon Gold ETF, target 88 rupees. Rupees 1.02 lakhs per 10 gram plus rupee hedge equals to 18% kicker. Tactic, scale in 9:15 to 9:45 am. Trail plus 7% stops. Indigo, target rupees 3,650, minus 9.2% from Monday. ETF plus 47%. Q4 loss doubles. Tata Motors, target rupees 920, minus 6.1%. JLR China sales minus 28%. Rural petrol demand evaporates. Asian Paints, target rupees 2,550, minus 7.8%. Petrochem inputs plus 39%. Volume growth stalls. Bajaj Auto, target 7,650 rupees, minus 5.9% from Monday. Two-wheeler rural sales 27% dip. Fuel sensitivity. SpiceJet, bankruptcy watch, minus 15% from Monday. Debt restructuring fails amid fuel crisis. ProPlay, March weekly puts, futures shorts. Edge number 1. Russia discount masterstroke. 1.8 million barrels per day at $6 multiplier equals 11.4 billion year-to-date savings. Gulf pays $95 plus IB angle. Strategic sourcing advisory mandates. Edge number 2. Volatility gold mine. India Wix 32.4 multiplier equals options desk print. Bankers Bootcamp call. Wednesday, Nifty 24,450 minus 0.9% from Monday close. 1 month 26,850, that is plus 5%. 3 months 28,500. War premium fades. IB aspirants, Hormuz case study equals to pitch perfection. Professionals, Vol restructuring desks feast. Exams, macro masterclass material. So here we have it, Bankers Bootcamp, chaos to conviction. Subscribe, comment. HAL dip buy, fear sells off. Knowledge buys in.